Hey guys, welcome to Make Money Count. I'm here in the podcast studio alone, but that's okay because Marcus is joining us from abroad and it looks like he might have a mustache from what I see right now.
I was trying to hide it. I was trying to hide it from you when we were starting. My kids love it. Everybody else hates it.
It's very Top Gun.
Yeah, I think it looks great. I think it's fun.
I like it. Well, Marcus is going to tell us a little bit about what's going on. And I have an exciting article and we can kind of chat for a little bit. So Marcus, what's up with the market at the moment?
Okay, so we had a CPI number come out.
Yes.
There were two things that I found really interesting about the CPI number. So number one, CPI headline inflation came in lower than expected, which is great for the prospect of rate cuts.
Yeah.
Okay, but like everybody got that, right? Like everyone's so tuned in now to what's happening with inflation because we all need reprieve from these interest rates, right? So if we're going to speak just about headline inflation comes in at a nice 2.5, lowest number since 2021, March of 2021. And down from June's number, which was 2.7%. So the beauty of this is that it cements the Bank of Canada's position to decrease interest rates in September. The probability charts on all interest rates, so like the bond yields, the TMX market, everything changed with this. So we started to see predictive pricing of like 200 basis points of additional easing by October of 2025. So like almost within the next 12 months, 200 basis points off on rate. Now, I don't know if we're going to see that much, but like you can bet that we're going to see some serious movement on interest rates.
Yeah.
I would think it would be interesting if we were to look back. Do you remember we did a show where we predicted what we thought would happen with the overnight rate?
I do. We do it a lot. I feel like we're a little bit of the Nostradamus of the mortgage world.
No, but we did one where we like really specifically dove into it. Like we actually charted it out. Anyways, I think that this level of easing we would not have predicted. Like I think it's going to be a lot of rate easing coming our way over the next little while. And I don't necessarily know if that's a good thing. I think it's just, a response to how quickly inflation's going to come off, how poorly the employment numbers are going to react. Consumer confidence is totally in the toilet. The real estate market sucks. Do you see what I wrote you? Like a little poem this morning?
I did really like that actually. Yeah.
Yeah. If a tree falls in the woods and no one's there to hear it, does it make a sound? If interest rates drop, but no one has the confidence to buy a property, does it really make a difference?
Right.
So like what we're seeing right now, hopefully, and very likely all these additional rate cuts are going to bring people back into the market, but the market's totally broken right now. Like the real estate market is broken.
Yeah, no. Well, I mean, that 200 basis points is a total market changer though. I mean, I don't know.
What are you seeing in the market from your side? Like, what are you seeing?
Activities, there's nothing there. People, the only thing that we're doing right now, I mean, there are purchasers, but the only thing that we're doing right now is just kind of getting people out of debt, right? Like people are still struggling. One of the articles that I was going to bring up today that I'm not, but just is talking about, the arrears in the Canadian, market is heavily focused on like credit cards and stuff like that. And, like that is the struggle right now. So a lot of things we're doing right now is refinancing to get people out of debt. So, but not a lot of purchases. You're right, 100%.
But you've seen kind of consistent downward pressure on the 5-year fixed.
Oh yeah, 100%. Yeah, I think our lowest rate right now is 4.24, which was 4.49 last month and 4.75 the month before. And so there's just like a continuous drop in interest rates. And I don't think it's going to stop anytime soon.
Remember our commitment, the lowest 5-year fixed rate, regardless, no matter what, even if we make $0 on it, let's just get it out there.
Yeah, 100%.
The other thing I really wanted to talk about was the CPI number in Canada is calculated differently from the CPI number in the United States. So, and we're going to start seeing more downward pressure on inflation readings because of the way we calculate it. It's hurt us in the run up, but now it's going to benefit us. And here's what it is. So in Canada, we take shelter costs and we include them into the CPI number. So mortgage interest for the last 2 years has been a massive component adding to inflationary pressure in Canada, inflationary readings in Canada. They don't do that in the United States. So when the Americans get their reading for inflation, interest is not, shelter costs or increasing interest rates is not a part of it. In Canada, it is. So far, you remember we've been seeing these inflation readings and we've been saying like, oh my God, like the biggest part of this inflation reading is interest costs. Well, now interest costs are going to be a drag on inflation because as the Bank of Canada reduces its interest rate, the borrowing rate, and fixed rates come down, shelter costs will decrease because interest costs will continue to drop, and it will continue to fuel lower and lower rates on that CPI number. And it's something no one's talking about, but it's super, super critical. And it should give people, namely the Bank of Canada, more confidence going into these next readings, knowing that decreasing interest rates is like a self-fulfilling prophecy now. It's cool.
It is cool. And like, I remember when we would do the CPI numbers like a year ago, and we were talking about just what you're saying, that housing costs are kind of propping up the inflation numbers. It was frustrating at the time because we wanted rate drops, but now, you know, it's a downhill, you know, you got to go up the hill, you come down the other side.
Yeah.
Yeah. You can't buy bacon from the cow store. Anyways.
Yeah, you love that one. So, I mean, like, that's really what I wanted to talk about. I wanted to say CPI number came in lower. It came in lower mostly because of how we're now seeing interest costs and shelter costs behave within the CPI number. It's going to keep going lower. My concern is how much more do we need to see as far as like just carnage in the housing market and consumer confidence being totally eroded, employment starting to become a concern. Like there are so many pieces in our economy that need to work together in order for our economy to be behaving in a healthy manner. And when those things start breaking down, you know what starts, Justin?
What? Recession?
Stinking thinking.
Oh, stinking thinking. The recession has started, but yeah.
The only thing that masks the recession is the population growth. Right. But we're in a recession. Make no mistake. The Bank of Canada knows we're in a recession. The Canadians know we're in a recession. Consumer confidence indicates a recession. It's just a question of how long this goes for and when interest rates can fix that.
Right. Interesting. Well, I definitely welcome a 200 basis point rate drop. And I think it's
not happening all at once. No, you'll probably get 75 basis points more before the end of the year.
I mean, that would be amazing. I think that's, again, like what you said, I think it's expected, right? I think you know, we're going to get at least a quarter point every announcement. So something else. I mean, we're talking about trying to stimulate the market. Our new kind of article segment of the podcast, which I expect fireworks for, but I never got them. We're going to talk about one today. I got one here. And it's just talking about, should Canada ditch the stress test? So just if you don't know what the mortgage stress test is, basically, in order to qualify for a mortgage, to take into consideration further rate increases when you come up for renewal or whenever the case may be, is that you're repriced, your mortgage is repriced. We add 2% to your mortgage, and that's how you have to qualify. Most all the banks and monoline lenders do this. There's some exceptions, but you know, for the most part, all Canadians are subject to the stress test. And what this article is talking about is, should we get rid of it? Is it going to help, you know, first-time home buyers? You know, it's talking about first-time home buyers are basically non-existent in the market, and that to blame is the stress test. I mean, to blame is really the interest rates, but the stress test, you know, doesn't help. And so, you know, it's just kind of talking about, you know, should we get rid of it? Is it going to help? If the stress test is there to protect consumers or to protect borrowers from rising interest rates in an almost definite falling interest rate environment, what's the point, I guess, is what it's saying.
What do you think?
I tend to think about things that are going to make my life easier and the lives of the Canadian homeowners, potential homeowners. And so I think that it should be dropped. Like we're talking about here. Do we think in the next 3 to 5 years that rates are going to be higher than what they are right now? I don't think so.
Yeah, no. Listen, I think that the stress test is too onerous. Mm-hmm. I think also that it's not adopted by all market participants, right? Like the credit unions don't utilize a stress test. It's the banks that utilize a stress test. I think we obviously, as mortgage brokers, there's ways to circumvent that with different lenders. I think for sure in this environment, it serves no purpose, right? And you could argue that nothing could stop people from buying previously.
Right.
Right? Like it was like the market was so hot. Now, even removing the stress test, I don't think you're going to see a rush of buyers come into this market.
Right.
I think that as property values drop and confidence erodes, fewer buyers come to the table. And you could argue that now's when people should be coming to the table.
100%.
Certain variables as inputs into the price of real estate. One really big one is the cost of the money you're going to borrow to buy the real estate. Well, if we know for sure that the cost of that money is going to be dropping precipitously over the next 12 months by some estimations 200 basis points, well, then maybe it's a pretty good time to buy a property. But unfortunately, when consumer confidence is eroded to the point it is right now, and buyer sentiment is what it is, abolishing the stress test probably won't do it.
Right. Right.
And the other thing is like the Minister of Finance spoke about the stress test some time ago already.
Right.
And like when rates were high and they were like, I think maybe before the last 25 basis, no, it was after rates were at their height before we dropped them 25 basis points. And the comment was, yeah, stress test is staying in place.
Right.
So what does that tell you? I mean, maybe because of kind of public outcry of like, you know, I feel like we were in this world where everybody was like, oh my God, real estate prices are too high. It's no good. It's causing a housing crisis. And now that real estate prices are falling, we're hearing the opposite. Mm-hmm. That's where my savings are. Like, we've got to shore this up. We're seeing these kind of like efforts to, you know, shore up new home purchases or like little kind of obscure parts of the market. But you can tell it's an attempt from the government to kind of poke its nose in and try to artificially bring the market back to life. So we'll probably see more of it.
Right.
You know, because people are upset, right? The economy goes bad. Like, you can't just tinker with interest rates to reduce housing prices, right? Like, you can't just say, oh, I want housing prices to come down, but I want employment to stay where it is, and I want consumer confidence to stay high. Mm-hmm. All of these things are interconnected. You start playing around with one of them, things are going to happen.
The house of cards falls down.
Yeah. And stinking thinking. And the stinking thinking starts.
That stinking thinking's a dangerous game.
I loved it. I love that you taught me that.
Yeah, it's a slippery slope. Well, listen, I mean, this was great. I'll see you again next week. If you're watching, wherever you're watching, hit like, hit subscribe, leave us a comment, you know, give us a topic, ask us a question. We love that kind of stuff, and we love addressing it on the podcast. And we love you, our listeners. So until next week.
Bye, buddy.
Bye.